Hi, I'm Rick Kaler. Thanks for joining me. Recently, I heard from an insurance salesman who scolded me for never giving any investment advice except to put all your money into the Wall Street casino. Over the past 23 years, I've penned scores of columns about the benefits of a diversified portfolio of asset classes, Wall Street being just one of them. Still, I would far rather invest 100% of my retirement funds in a diversified portfolio of U.S. stocks than speculate on a roulette wheel. There's a big difference between investing and speculating. I learned that difference the hard way when I was in my early 20s. I had some money in savings and some money in mutual funds that were in my IRA, but they just weren't going anywhere. I mean, they were only increasing at that time at about 10% a year. That wasn't fast enough for me. Gold prices, they were up, going higher. So I took $1,000 out of my savings and put it into gold futures. That seemed exciting. And indeed, in a few days, my $1,000 had tripled to $3,000. I thought, heck, I can quit my day job at this rate. Well, my broker suggested putting the $3,000 that I'd earned into pork bellies. And even though I live in a rural state, I really didn't know what pork bellies were, but he seemed to know and seemed that he knew what he was talking about, so I bought pork bellies. For a few days, everything was great. Then the price of pork bellies tanked, and I mean tanked. For 5 straight days, the price fell so dramatically that the trading was stopped at the beginning of the day. I couldn't even sell. I couldn't get out. There was nothing to do except watch the losses pile up. By the time trading had resumed, my $3,000 had grown to a loss, a margin call, for $12,500. And if you adjust that for inflation, about $50,000 in today's dollars. To pay for it, I had to wipe out my savings, cash in my IRA. At least, in my early 20s, I did have some savings so that I didn't have to go borrow the money. I had made a classic rookie mistake. I had speculated instead of invested. There are 3 things that you can do with money that you want to set aside. You can save, you can invest, or you can speculate. And there's a huge difference between the 3. Saving is putting away money for future needs, often in a bank savings account or CDs. And that future need isn't building wealth, it's having money when you need it for emergencies, or perhaps a large purchase like a house down payment. Investing, on the other hand, is diversifying money into various asset classes, like stocks, bonds, real estate, commodities. The purpose is to build wealth over the long term. So I like to say that investing is boring. While you will see the value of your money decline, as well as increase, it's unlikely, though, that over a long period of time, you're actually going to suffer a permanent loss of capital. The returns over time will probably be more than you would earn from a simple savings account. Now, speculating is putting money into a high-risk investment in the hope of building wealth quickly. Speculating is exciting, it's dramatic, and it's risky. Examples of speculating include trying to time markets through day trading, putting everything you have into one investment or on one stock, borrowing on the margin to buy stocks, leveraging real estate, or buying commodities futures. True, great fortunes have been made through speculating, but many more fortunes have been lost. Not only can you lose your initial investment, you can, just like I did with my pork bellies, lose way more money than you had to begin with. When novices skip from speculating, chances are that they're going to lose big. I think research has shown in the 90 percentile of those who put money in the futures market lose. Unfortunately, too many of them learn the wrong lesson when they lose. They decide investing is too risky, never realizing that they were speculating rather than investing. So as a result, in the future, they may limit themselves to just saving. Their money stays safe, but over time, they lose in a big way, especially through decreased purchasing power. Investing is not a casino, but a way to earn the long-term returns that are so important for building net worth and achieving financial security. Thanks for joining me.